Now let's move on to the economy section from the month of July. The first topic we have is the problem of twin deficit in India. Now the Ministry of Finance has warned of a twin deficit problem due to higher commodity prices and a rising burden of subsidy. Now, a twin deficit refers to a situation where an economy runs relatively large current account and fiscal deficits. That is, current account deficits are high and fiscal deficit is also high. A higher twin deficit is inherently destabilizing and was the primary reason why India faced a currency risk back in 1991. Now, about the fiscal deficit. A fiscal deficit is a situation which occurs when the government expenditure exceeds its income. It is the difference between the total expenditure of the government and its total revenue, excluding the borrowings. Now, it indicates the extent by which government spending exceeds its income and the total borrowing needed by it to fill this gap. Now, the report on the India's fiscal deficit is that the government revenues has taken a hit following the cut in excise duties on diesel and petrol. Hence, government needs to trim its revenue expenditure or the money the government spends just to meet its daily needs. This is necessary in order to protect growth supporting capital expenditure, that is capex. Now, about the current account deficit. The current account measures the flow of goods, services, and investment in and out of the country. There is a deficit in current account if the value of the goods and services imported exceeds the value of those exported. Now, the current account deficit is equal to trade gap plus net current transfers plus net income abroad, whereas trade gap is equal to exports minus the imports. Now, the current account balance measures the external strength or weakness of an economy. A current account surplus implies the country is a net lender to the rest of the world, while a current account deficit indicates it is a net borrower. Now, the report on current account deficit is the costlier imports such as crude oil and other commodities will widen the current account deficit and put downwards pressure on rupee. A weaker rupee will in turn make future imports costlier. So a vicious cycle is there. If in response to the higher interest rates in weak Western economies, especially the United States, FPI continues to pull out money from India, that too will hurt the rupee and further increase current account deficit. Moving on, SBI estimates on poverty. Now, SBI Research has released a new study on poverty. Some of the key findings from the estimate is that as per the SBI Research, poverty in India declined to 17.9% in 2020-21 compared to the last available official estimate of 21.9% in 2011-12. Now, these new estimates suggest an annual decline of 2.75 million in numbers of poor during 2012 and 21, as against a drop of 20 million every year between 2004-5 and 2011-12. So, a sharp decline. The data confirms a sharp slowdown in India's rate of poverty reduction by two other estimates by authors affiliated to World Bank and International Monetary Funds released earlier this year. Now, there is sufficient evidence to suggest that the economic condition of most people at the bottom of the distribution has worsened. Now, regarding the PLFS data, per capita real income from PLFS survey shows 1.1% decline per annum between 1819 and 2021. The drop was largely due to weakening urban per capita income, which went down by 4.2% per year over that period. The per capita monthly consumption declined at 0.12% per annum between the years 2018-19 to 2021. Urban areas saw a 4% annual decline in per capita consumption against a 3.7% annual rise in rural per capita consumption. The proportion of India's population for whom per capita income was not sufficient to meet consumption expenditure was 26% in 2018-19, which increased to 29% in 2020-21. Both agricultural as well as non-agricultural wages fell in the last year, with farm wages declining at an annual 2% and non-farm wages at 3.8%. Now, urban income and consumption declines raises question on claims of an economic revival. The implication is that the decline in urban income will result in lower demand, which has implications for revival of economy. Some of the trends could worsen in wake of inflationary spiral India is going through that will reduce real disposable incomes. Moving on, we have Payments Vision 2025 by RBI. The RBI has released the Payment Vision 2025. The core theme is e-payment for everyone, everywhere, every time. That is 4 E's. E-payment for everyone, everywhere, every time. The vision is to provide every user with safe, secure, fast, convenient, accessible, and affordable e-payments option. 6 attributes. The activities to be taken by the RBI till 2025 have been captured across 5 anchor goal points, that is integrity, inclusion, innovation, institutionalization, and internationalization. Moving on, actions to be taken under the Payment Vision 2025 include regulations for big tech and fintech in payments, guideline on payment involving buy now, pay later services, introducing the central bank digital currency, that is CBDC, geo-tagging of digital payment infrastructure and transactions, create a payment system for processing in online merchant payment using internet or mobile banking, linking credit cards and credit components of banking products to UPI. The expected outcome of the vision document include restrict the volume of check-based payments to less than 0.25% of the total retail payments, increase the number of digital payment transactions 3 times, UPI register 50% annualized growth, IMPS and NEFT register 20% growth annually, reduction in cash in circulation as a percentage of GDP. These are the expected outcomes of the vision document. Moving on, we have Draft Development of Enterprise and Service Hub, that is DESH Bill. The government plans to table the Development of Enterprise and Service Hub DESH Bill in the upcoming monsoon season. The bill will replace the Special Economic Zone Act of 2005. So, the World Trade Organization's Dispute Settlement Panel has ruled that SEZ scheme was inconsistent with WTO rules. Its provision directly linked tax benefits to exports. Now, countries aren't allowed to directly subsidize exports as it can distort market prices. Now, SEZs also started losing their attraction after the introduction of minimum alternate tax and a sunset clause to remove the tax swaps. Now, SEZ units used to enjoy 100% income tax exemption on export income for the first 5 years, 50% for the next 5 years, and 50% for the brought back export profits for another 5 years. Now, key provisions of the draft DESH bill is that special economic zones will now be renamed as Development of Enterprise and Service Hubs, that is DESH. These hubs will no longer be required to be net foreign exchange positive cumulatively in 5 years, that is export more than they import as mandated in SEZ's regime. The hubs will be allowed to sell in the domestic market easily with duties only to be paid on the imported inputs and raw materials instead of the final product. In the market SEZ regime, duty is paid on the final product when a product is sold in domestic market. The bill proposes equalization levy for goods and services supplied to domestic market to bring taxes at par with those provided by units outside. The units operating within the new hub will no longer benefit from direct tax incentives. This will make hubs compliant with WTO organization rules. The bill does not limit how long units can store goods, which is 1 year currently. Besides, there is no mandatory payment requirement in foreign exchange. In current SEZ regime, most decisions were taken by Department of Commerce. The bill allows for states to participate and even directly send recommendations for development hubs to a central board for approval. Besides, boards will be set up to oversee the functioning of the hubs. Moving on to state startup rankings, the third edition of state startup ranking has been released by the Ministry of Commerce and Industry. Now, about the state startup ranking, the state ranking is undertaken by Department of Promotion and Industry and Industrial Trade, that is DPIIT. Since 2018, its aim is to support states and union territories in developing their startup ecosystem and learn from the best practices of others. The states are evaluated across 7 broad reform areas, that is institutional support, fostering innovations and entrepreneurship, access to market, incubation, funding support, mentorship support, and capacity building of enablers. The state and the union territories are classified into 5 categories, that is best performers, top performers, leaders, aspiring leaders, and emerging startup ecosystems. Now, the ranking of 2021, the best performer was Gujarat and Karnataka, appeared as the best performance in the state category. Now, Meghalaya topped among union territories and northeastern state category. Now, the top performers were Kerala, Maharashtra, Odisha, Telangana, and Jammu and Kashmir appeared as the top performers among union territories and northeast state category. Moving on to the Global Findex report by World Bank. Now, the World Bank has released the Global Findex report 2021. The report surveyed over 125,000 adults in 123 economies during the COVID-19 to better understand how people use formal and informal financial services and digital payment. Now, key findings of the report is that there is an increase in bank account ownership. Account ownership worldwide increased 50% to reach 76% of the global adult population. Now, access to formal banking, large shares of global populations without formal banking lives in India and China because of their size. India is among 7 countries home to half of the world's 1.4 billion adult without access to formal banking. Now, the gender gap, women are often excluded from formal banking services because they lack official forms of identification, do not own a mobile phone or other forms of technology, and have their lower financial capabilities. Now, 74% of men had an account in developing countries, while women account for 68%. COVID-19 and digital payments. Now, COVID-19 pandemic catalyzed growth in the use of digital payments in developing countries in 2021. 18% of the adults paid utility bills directly from an account. About 33% of these bills paid online for the first time. Now, mobile money. Mobile money has become an important enabler of financial inclusion, especially for women. Example in sub-Saharan Africa. Now, some of the recommendations of the report is that as access to digital banking services expand, government policies must factor in protection for most vulnerable, including women, the poor, and those with limited educational attainment or financial literacy. Moreover, the gender gap in mobile access must also be addressed to ensure equitable progress on financial inclusion. Moving on to Business Reforms Action Plan, the Ministry of Commerce and Industry has announced assessment of states and union territories under the Business Reforms Action Plan 2020. Now, the assessment has been released by the Department of Promotion of Industry and Internal Trade, that is DPIIT, Ministry of Commerce and Industry since 2014. The aim is to boost investors' confidence, foster business-friendly climate, and augment the ease of doing business. This is done by introducing an element of healthy competition through a system of assessing states based on their performance in the implementation of Business Reforms Action Plan. It includes 301 reform points that cover 15 business regulatory areas such as access to information, single window system, labor, environment, sectoral reforms, and other reforms spanning across the life cycle of a typical business. Now, sectoral reforms have been introduced for the first time in BRAP 2020, wherein 72 reforms were identified across 9 sectors, namely trade license, healthcare, legal metrology, cinema halls, hospitality, fire NOCs, telecom, movie shooting, and tourism. The report categorizes state into top achievers, aspirers, emerging business ecosystem as against the earlier practice of announcing ranks. Now, key ranking from BRAP 2020 is top achievers included Andhra Pradesh, Gujarat, Telangana, Haryana, Karnataka, Punjab, and Tamil Nadu. Achievers included Himachal Pradesh, Madhya Pradesh, Maharashtra, Odisha, Uttarakhand, Uttar Pradesh. Aspires include 7 states: Assam, Kerala, Goa, Chhattisgarh, Jharkhand, Kerala, Rajasthan, and West Bengal. Now, emerging business ecosystems, there are 11 states and union territories, including Delhi, Pondicherry, Tripura in this category. Now, the observation made by the finance minister is the nature of reforms has undergone change since 1991. The reforms of 1991 were out of compulsion. The objective now is to see what will bring out improvement in the system and ensure better lives. Hence, an element of nudge has been brought in every layer of the government. Nudge policy gently steers people towards desirable behavior while preserving their liberty to choose. The purpose is to infuse a culture of learning from each other's best practices and improve business climate in each state or union territory with a unified objective for India to emerge as the most favored investment destination across the globe.